Hi everyone, Inmode have released updated results. This covered Q2 of their financial year. The results are much better than expected. I'm really pleased about this because I have a shareholding in Inmode. It's one of my favourite companies. So I'm going to take you through those results, what that means. By the end of the video, you should have a view as to whether Inmode may be a suitable investment for you. Let's jump into the screen now and have a look at those results. Okay, here we go. So the headline from Inmode is they expect a record Q2 financial results. Inmode, for those of you that are new to the company, self-described as a leading global provider of innovative medical technologies. I think in short you could say medical devices. They're finalising their results. Their preliminary expectations are as follows. Revenue range around about $113 million. EPS around about 57 cents per share. For the full year, their financial year 22, you're looking at 425 to 435 million, and pretty high gross margins there. Now, this is particularly interesting news, and I believe the stock will be responding to this well in terms of its market price, because the guidance has actually been increased. So it's a rare company at the moment that's actually increasing their guidance. So from that 420 million range to the 430 million range for revenue. Now, whether, of course, that will result in an increased margin is another point. Certainly, the increased revenue is certainly welcome. However, what we should note is for Q2, this sort of 57 cents range, I think they were expecting around about 51. So that is an improvement compared to what was expected. You can see here from the analysis tab on Yahoo Finance, the average estimate there of 51 and the high end of 55 cents per share. So that actually they beat the high estimate. And you can see here they beat the average estimate for revenue by 10 million. Here is the stock response. We're getting towards market close on 12th of July and we're up around about 16%. That does look like quite a big jump on the company, but actually if we take this back around about a year, the top was almost 100 and we're almost at sort of mid-20s. So approximately 70 to 75% of the value has been lost from this company in terms of its market cap, but the performance hasn't got 70 to 75% worse. So potentially Inmode is still undervalued. If we look at the stats here, trading P around about 12, 4P also around about 12. And the analyst consensus at Yahoo is earnings growth of 33% a year the next 5 years. If we have a look at the Simply Wall Street, again, just for comparison and completeness, they've got a forecast annual earnings growth of 12%. So quite different to the Yahoo, but what we do know is that forward PE, current PE is around about 12, then the price to earnings growth ratio is at the very most 1, but could be better than that. For transparency, I do hold Inmode, and that holding is currently worth around about £900. The total return is, on a compound basis, minus 4% a year. There's around about 2.5% of my portfolio. And by the way, if you do like this kind of site for portfolio management and reviewing your positions to get that kind of compound annual growth to see how you're doing, it's called Share Sites. It's a great portfolio management tool. There is a link in the description below for that if you fancy looking at that and getting a discount. For a deeper dive to get a really good feel for how good this company could be, click on screen now because the deep dive will show you this could be an opportunity not to be missed.